my question to you, Grant, if a narrative comes out from the RBA and they say, look, this 2 to 3% thing, we're wrong. It's now 4 to 5%. Would that be a significant change, and would it change what you do when it comes to investing?
I don't think it would. I'd probably go a little bit more aggressive than I have been.
What would you change?
I'd probably look to get more debt on my hands because it's going to be inflated away, because there'd be a reason as to why they're increasing the expectation of inflation being higher for indefinitely or a certain period of time, which means, to your point before, it's probably because they're looking to inflate their own debt away because they've got no other way to pay it down outside of increasing the number of dollars coming in order to pay the interest rate and all that kind of stuff that they've got on their own debt. So then I'd look at utilizing the same lever in my own investment portfolio. Again, not financial advice, just an opinion around what.
No, this is pure speculation, right? They're not doing this. It's interesting because the idea is, and we should really frame this up to give it context, if you've got $1 million in debt and it's inflating away on their 2 to 3% target, which I'm going to pick 2%, essentially it's eroding away at $20,000 a year in purchasing power. If that suddenly flipped up to 4%, that's 40 grand a year in purchasing power that's being eroded away. So that's inflation actually working for you.
Completely.
Right. When we look at that as a scenario, if the game changed, and I'll give you the reverse of that, if you could buy properties that were growing at 2% a year and then suddenly an opportunity come up where you could buy them where they grew at 4% a year, would you change strategy?
Damn straight I would.
As would I. So this is one of the things that's really made me rethink some of my own investing here. I'm looking at this and going, have I been playing the wrong game? Have I been too consumed by things like cash flow or growth when if 5% inflation is the real game here compounded, really then debt is the game. Debt is the whole game, which is something we know that George Antone advocates in a big way and why we like his book so much. And obviously there's layers to this. You do definitely have to take in consideration. But it's really reshaped how I think about it, particularly in an environment where it's like this may be just the norm, what we're going through now.
Entirely, as well as what we've seen, like even recently in the US with some of their bank challenges that they've had and all that kind of stuff, where the solution was almost like a production of more cash. And it's like, well, if there are only a couple of levers that governments can push and pull, then all they need to do is just shift the narrative around what has been acceptable. Like even one of the challenges in the back of my mind, Charlie, is like, if that's just the change that needs to happen of the narrative from a 2 to 3% to a 4 to 5% in an extreme example, it's like, what about like stimulus just becomes a yearly in the budget every year? They just factor in like stimulus, which is one way to support the increase in inflation. And then we just sit there and we go, why? And they go, well, it was just, we should have done it in the past. This is how we've done it. We've seen that it actually works. This is what we're going to do in the future. And this is how it benefits everybody. I'm like, there are things that could happen, speculation, that I just go, I feel as though this is part of the whole narrative around like the benefit around real estate.
All right, so I brought in some maths in this. It's always nice when we can bring in some maths, isn't it?
You got the calculator open for sure.
All right, so the example I used earlier with the cup of coffee is like, can you imagine literally handing over $25 for your mocha thing?
Yep.
Right. What makes real estate so unique is that when you buy it, you use leverage, right? So you're getting a loan from the bank, and essentially what you're doing is buying in today's dollars, and then you're going to pay that off over time.
Yep.
Right. So a very unique attribute to real estate. And I'm not saying you can't use debt with other investments, but the norm in here is. What I started to think about is going, okay, well, if I took that $25 today and I, let's say, borrowed it and was going to pay it off, how does the reverse purchasing power work? So have you seen the maths on this one? Did you see this screenshot as well already?
I've done the whole.
I'm going to stop sending you the screenshot. I'm going to make you guess on the podcast.
No, but I've done the whole Georgia. I get it. Like,
okay, well, let's do this one here. Is like, let's say you bought that $25 in purchasing power, reversed it to 2053 is $108.
Yep.
Right, so let's use this, and I'm on the calculator right now. Let's say you buy a property for $1 million using really easy maths, and it inflates away using this concept here. That's $4.3 million in 2053. So if you bought a property for $1 million today, does the 5% thing, in 2053, it's $4.321 million. Isn't that nuts?
It's ridiculous, but it's so it is not linear, which is why to our brains it just doesn't make sense. And there's a lot being written about this around how when our brains try to do some kind of problem solving, it'll use some kind of number that makes sense, which is like a percentage or a double or a triple. So when you sit there and say, well, your $6 coffee, what do you think it'll be in 20 years? The brain will automatically go to $12, maybe 18, because they're these multiples as opposed to a compounding view, which is like a hockey stick, right? And so when you say those things, it's like it sounds like it's completely illogical. It's like the calculator's broken because how can 1 mil turn into 4 mil in a 30-year period? Shouldn't it be double? Shouldn't it be maybe triple? It just doesn't make sense to people.
So this is where, to make this even more of an example, I want you to imagine here that you buy not just one, but a couple of properties using this principle. Can you, in the idea of using a sell down strategy here, see that if you were to buy, let's say, 5 properties, all for $1 million each to make it easy, you've got $5 million worth of properties, and you've got 100% debt. You've got $5 million in debt at today. In 2053, if you were able to hold them, you would literally be able to sell 2 of them and pay them off because of the purchasing power difference.
Completely.
How bonkers. And that's after tax I've done it, which is why it's 2, because we'll cover tax in another time. That is the power of inflation. That is the power of compounded returns. Just absolutely mind-bending when you think about these things.
And there's so many other layers to put on top of it. I know you kind of spoke about the whole tax side of it all, but you've also got like the value growth of the asset, the rental income that you've also got on top of the asset. Like there's so many other layers that sit within here. And again, inflation might not be to our calculation, which has all been around for this arbitrary sort of 5%. It could actually be worse. It could be 6%, or it could be better. It could be 4%. Maybe it is a little bit lazier, but it's more about trying to understand those bands of going, where do you think it's going to land in order for you to actually go, well, this is a bit better of a story, but also put the layer of it across the top of, if I didn't buy assets, Charlie, do I really think that I'm going to be able to, I don't know, have an income of $400,000 a year if I was on $100,000 a year now? And that's using your 1 million to 4 million, right? And that's in 30 years. Do I think that I'll be earning that 400,000? Or if I've got money put away for retirement, am I going to be able to last that 30 years knowing what it probably was going to cost me to actually survive based on where I'm at now? All right, fellow property investor, if you loved the value from this short video and wanted to know more about how you can win at property investing, check out the full episode by clicking the link on your screen or in the description right now. Alternatively, click subscribe and you'll never miss another one of these videos.